Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 26th of July. We have a busy week ahead of us, which starts with slow economic calendar on Monday. On Tuesday, we should be on the lookout for US durable goods orders and also consumer confidence data. Moving forward, Australia and Canada consumer price index data is followed by US crude oil inventories and Fed interest rate decision and FOMC press conference on Wednesday. On Thursday, we should be paying attention to preliminary Q2 GDP figures, jobless claims data for US, and Japanese unemployment rate for June. The week will finish on Friday with Eurozone preliminary consumer price index data for July, GDP Q2 figures, and unemployment rate for June. Also, Canada GDP and US Michigan consumer sentiment data is published. Earnings continue with Pfizer, AMD, Facebook, eBay, Alphabet, Microsoft, Amazon, American Airlines, and Barclays. Now, let's take a look at few markets. Let's start with the Bitcoin. Bitcoin price action is still consolidating sideways, supported by psychologically important 30,000 level and capped by 33,900 on the upside. We had a corrective pullback last week, which was then bought around 30,000. Again, you can see this indecision, and then eventually the spike higher. Breakout above 33,950 could open the way for a potential extension to the upside, targeting additional resistances at 36,000, 37,000, possibly even 40,000. Alternatively, if we see a rally and a rejection or a gradual move lower and the loss of 30,300 to the downside, possibly a retest of that level from underneath as a newly found resistance, that could open the way for the extension to the downside, targeting additional support towards 28,880, possibly even lower. This is Nasdaq. Nasdaq also had a corrective pullback on Monday, which was then bought basically by the dip. Players came in and we saw a push higher, which created a new all-time high. Next week, it's the last trading week of the calendar month, so be careful for some month-end rotation. Key trading level going forward is at 15,000, which is previous all-time high. So basically a pullback to 15,000 and a rally from there, or a breakout above this current all-time high at 15,140 could open the way for a gradual move higher, targeting additional new all-time high. Your guess is as good as mine, so 15,300, 15,400, 15,500, add 100 points as you go along. Alternatively, if we see a dip lower and a loss of 15,000, that could open the way for a deeper corrective pullback, targeting additional support at 14,900, possibly even 14,760. German 30 or the DAX index also had a corrective pullback on Monday, and the buyers came in and pushed the price higher. However, the current price did not break above these previous all-time highs, so it's basically lagging behind Nasdaq in this case. Key trading level going forward is at 15,570. Pullback to that level and a rally or a breakout above 15,700 could open the way for the extension to the upside, targeting additional resistance towards 15,800, 850, possibly even 15,900, 16,000 to the upside. Alternatively, if we see a pullback and a loss of 15,570, retest of that level from underneath as a newly found resistance, that could trigger a deeper corrective pullback towards 15,400, 15,330, possibly even 15,200. Euro dollar appears to be under pressure, downtrending quite nicely, supported by falling resistance trend line. Next week we have FOMC rate decision and also minutes. So what I'm talking about from now on in relation to currencies would likely be impacted with what Fed might say and the perception of the hawkishness or dovishness going forward, which will impact US dollar volatility. But as it stands, euro dollar is under pressure. It's capped by psychologically important one spot 1820 area. So it's about 20 points. That's a zone that's capping the price going higher. Rallying to that level and the rejection, or a dip lower and a loss of these current lows at 17,000, one spot 1750, apologies, could open the way for a deeper corrective pullback towards one spot 17, possibly even one spot 1650. Alternatively, we see a rally and a breakout, an end of day close above one spot 1820, retest of that level from above as a newly found support that could trigger oversold bounce back, short squeeze higher, targeting additional resistance at one spot 1870, one spot 19, one spot 1930. Sterling dollar is painting a very similar picture, downtrending, capped by falling resistance trend line. We had a corrective pullback which came into this area down here, one spot 35.70, which is an interesting level because this is 50 period weekly moving average, and we saw an oversold bounce back of that level. Key trading level going forward for sterling dollar is at one spot 38, rallying to 138 and the rejection is bearish, or a pullback to one spot 37 and a loss of that level could open the way for a gradual move lower, targeting additional support at 136.50, 136, 135.70. Alternatively, if we see a push higher and an end of day close, in particular above one spot 38.60, retest of that level from above as a newly found support that could create an oversold bounce back higher, targeting additional resistance at one spot 39.60, one spot 40. Dollar yen was uptrending quite nicely, supporting, so therefore supported trend line here. A loss of that support became a newly found resistance, and then we saw a rejection. Now the price is creating an oversold bounce back, retesting that psychologically important 110.50 level. Rejection from this area and a gradual move lower, in particular loss of 110, could open the way for the continuation to the downside. Therefore, US dollar weakness targeting 109.50, 109 to the downside. Alternatively, we see a push higher and an end of day close above 110.50 that could target additional resistance at 111, possibly even 111.80. Gold is coiling, energy is building up ahead of that Fed meeting. Key trading level going forward is at 1800. As long as 1800 support holds and we see a rally and a breakout above 1814, 1817 area, that could trigger the extension to the upside, targeting additional resistance at 1831, possibly 1850, 1870 to the upside. Alternatively, if we see a dip lower and a loss of 1800, retest of that level from underneath, possibly significant US dollar strength as a result of what Fed might say, could possibly open the way for a gradual move lower, targeting additional support at 1780, 1770. Crude oil, significant oversold bounce back after that OPEC announcement about production increase after the agreement between the Saudis and United Arab Emirates caused a corrective pullback down towards 66. Key trading level going forward is at 72. Rejection at this area and a gradual move lower could open the way for the continuation of this selling pressure, targeting 70, 69.20, 67.30, possibly even 65 to the downside. Alternatively, if you see a breakout and an end of day close above 72, which could be either a pullback to 70 and a rally, or a breakout above current 72 and a retest from above, could trigger the extension to the upside, targeting additional resistance at 74, 76, 76, 90. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.
Let's start your investment journey.